I want to go over the portfolio equity peaks. 4 of the 7 portfolios are at equity peaks to start the year. Very strong performance the first 4 days. As we anticipated, we revised our portfolios in Q4. Q4 had a tremendous amount of chop, very difficult to trade. We anticipated a change in tone in the markets at the new year, and that's what happened. So first 4 days in, January 4th, 5th, 6th, 7th, these are the results. The best opportunity in retrospect was to jump in on the micro stock index and micro gold portfolio. Developed this group of strategies. Now it includes a long list of existing strategies, so it's not a long list of new strategies. There are some new strategies in this, some new revisions, but a lot of these we continue. We went from 52 strategies down to 37. More volatility, so we cut back on the number of strategies, and it was in a $2,700 drawdown. The current portfolio setup at the beginning of the year. Q4 was tough. We went through, I'm going to show you where we were on this portfolio. This was the portfolio that was the micro stock index and gold portfolio in 2020, and 2020 had a strong first half. In June we revised it to this, and this was on June the 1st, and so going through the second half was very challenging. It was up. If you trade this portfolio from June 1 through December with the same number of contracts, you'd be at 2505 because Q4 was very challenging. All 3 months were down. We recommended scaling back in the Q4 and waiting for the new year, waiting for the new revisions. And so you see this big drawdown here. We revised the portfolio, said to scale back and or start in the new year. And so the micro stock index and gold portfolio, here's where it is. It was still in this drawdown. In the new portfolio, if you transition to the new portfolio, it has a lower drawdown. So it was in a drawdown right here at this level at the end of the year. And this is what it's done so far. So 4 days does not a trend make, but I like the tone of the market so far. It's more trendy. It's less volatile. Intraday chop going on, and strong Q4, a strong Q1 historically. If you see, let's take a look at 2018, even 2019. These are big numbers for trading micros to get nearly 10K in 2019. That type of market, just trading micros. There's 37 strategies. A lot of these don't trade. Most of the time, you have no more than about 10 positions on typically. So you only have about 10 positions on at max in most cases. In most cases, you can have more. There are 37 strategies. $2,700 so far on the year. So that would have been $27,000 if you were trading the 1 mini instead of the micros and the regular gold contract. So the worst case drawdown would be $33,000. So this was the best setup coming into the year based on the risk to reward, the $2,700 drawdown. And so in retrospect, it would have been a good to start there. But I also said at the end of the year, you can start on January the 4th, or you can wait for it to make an equity peak and then get in on a drawdown. And so if you're looking for a portfolio that's still has not rebounded yet, we're only 4 days in, 25K, all of these are cyclical. The 25K, 50K is one of our starter portfolios. There's only 10 strategies. Here's what it's done. It's right at break even, and you can see the drawdown curve here. You want to start on the drawdown. You wait for a strategy to make an equity peak and then come in on a drawdown, or you get in on one that's already on a drawdown. Here's where the 25K portfolio is. Minus 65 on the year, and that's the 10 system version. So there were 3 other portfolios at equity peaks. Let's look at the 200K portfolio. It made equity peaks yesterday. Strong start as well, 14,955. This one was revised on November the 30th for start of January 1. Stock index portfolio 27. We revised this in at the very end of December the 29th. 27 strategies. Made a quick equity peak, up 10K on the stock index portfolio. That's about $1,091 if you're trading the micros, and the stock index portfolio. That's the Stock Index Portfolio 27. All strategy access 51 plus 7. The 51 strategies is the short list from 2020 that we like the best going into 2021, and with 7 of our favorite new strategies. This is up 20,000 if you started with that. It's at an equity peak as well. Let's look at the short list by itself without the new strategies. It is up 7,000, and it has this only has a $16,000 drawdown. So if you narrow the list and you try to find strategies that will reduce your drawdown going into 2021, the short list was the best setup to trade. And the all 78, that's just all 78 strategies. We recommend one of these other portfolios, but if you want to look at all of them combined, it's actually up 31,000. So dollar-wise, it's made the most. Risk-wise, it's rebounded from these low drawdowns, but we don't necessarily at this point recommend trading all 78. We'd rather see you trade one of these others until this made a new equity peak. It's quite normal for strategies and portfolios to expand drawdowns on a dollar basis as volatility and point values increase over time. So that has to be considered. We would expect profits to go higher as well as drawdowns to go higher. So you have to scale back for the same account size. So if you're looking at this portfolio, 479,000, these last 3 years, volatility has expanded, and now drawdown has expanded. So that's going to happen on a dollar basis. You have to think in terms of percentages, and the micros give you an opportunity to scale more incrementally if you have a smaller account. So that's the update on January the 8th for trading at the beginning of the year, and how we have 4 of these 7 portfolios that we recommended right at equity peaks. And then the one that's in a drawdown that we recommend right now is the 25K, 50K portfolio. Let us know if you have any questions on these.